When you see life insurance ads like this on TV, you might find yourself thinking, hang on, is that woman about to give birth to a pillow? But also, maybe I should get life insurance. When what we should really be thinking is, do I already have life insurance? Because an estimated 70% of working Australians already have life insurance through our superannuation. When you join an Australian super fund, by default, you'll often get life insurance, disability or TPD insurance, and sometimes even income protection insurance, which means unless you specifically opted out, you're probably already covered by what's known as group insurance.
So if something happens to me, I've already got insurance to provide for my pillow?
Yep. But insurance in super isn't free, so it's important you find out whether you have it. And I like the green.
Get out.
Because insurance premiums can really eat into your superannuation before you retire.
Before I retire, there's just a few things I'd like to say as I permanently check out.
I hope he means die.
A 30-year-old with default life, disability and income protection insurance through super could be paying anywhere from $2 to $20 a week, and the cover they get for it can vary by hundreds of thousands of dollars. A KPMG review found that by the time we retire, on average, default group insurance premiums reduce the super balance of men by 5% and of women by 7%. And that could put a real dampener on your retirement plans.
So I got us a brand new camel van. And it does 6 miles to the carrot.
The cost of super insurance hits young people, casual workers and low-income earners the hardest. They can end up paying more for insurance than they're putting into their super, so their balance actually goes backwards. Not only that, but if you're a blue-collar worker, you're deemed to be at greater risk at work, so your premiums are higher. Hello, Cobber. Take me to real Australia. A 21-year-old blue-collar worker with default group insurance today could have 250 grand less in their super by age 65.
Son of a brick.
Ah! Of course, having insurance can be a good thing, but you need to find out how much it's costing you and whether the group insurance you have is right for your circumstances. The most common way of paying too much for super insurance is by paying for it twice or more. 40% of working Australians are in more than one super fund. This means that unless you've opted out, you're paying insurance premiums in each super fund you're a member of.
But multiple policies means multiple payouts. This is the greatest day of my life.
Look, that is possible, but it's far more cost-effective to just be in one super fund that has the insurance cover that you need. Oh, and you generally can't claim on more than one income protection policy.
So my identical income protection policies are about as useful as a hole in the head?
Yep, which you also have. Group insurance through super doesn't take into account your personal circumstances. So the default death coverage might be too much for young single people, but not enough if you have a family or mortgage.
Back at work already?
I didn't have enough insurance.
Some funds even assume you're in a high-risk occupation or even default you as a smoker unless you tell them otherwise. So this guy
Don't break it now!
could be paying the same in insurance premiums as this guy.
Broken nail.
In 2017, Australian Super signed its public service members up to income protection insurance, which could cost over $80 a month. They only let them know by a form letter. You know, that thing that none of us ever read? Members only had 2 weeks to opt out.
So why don't the super funds just call us up and make sure we've got the right insurance?
It's often in their interest for us to have too much insurance. See, many super funds are actually related to the companies that they buy the insurance from, which can lead to more expensive insurance products. Come with me. To control costs, some funds have agreed to terms and conditions that make it harder for members to claim, especially for disability insurance. Some policies pay out if you're unable to perform your own job, whereas others make you prove you're unable to perform any occupation to which you're reasonably suited.
Great. Do I get my disability payout?
Nope. Your insurer says you're able to work licking stamps.
But I'm a construction worker.
Who's reasonably suited to this?
Could be worse. If you're working 15 hours or less when you're injured, you might also have to prove you're totally unable to do 2 things from this bizarre list.
Prove to me you can't transfer and toilet. Actually, don't worry, I'll just tick that second one.
It's harder for people who work less to make a claim, even though they pay the same premiums?
Yep, leaves a bad taste in your mouth, doesn't it?
Already got a bad taste in my mouth.
If insurance in super sounds like a bit of a mess, that's because it is. But look, that doesn't mean you should... It doesn't mean you should rush to opt out. Or run off to buy the retail life insurance you see on TV. There are costs and benefits to both. Life and disability insurance through super is generally cheaper, it's paid from your pre-tax income, and basic cover is automatic, so no need for a medical. But group insurance isn't tailored to individual needs. Retail insurance generally costs more and there's a full medical questionnaire, but your cover is more tailored, and they do usually include own job disability.
But what do we do?
Well, for many Australians,
No, I mean, how do we get away from this speech?
And there are just so many happy faces that I can ACCC.
Boo!
Look, superannuation is still the most cost-effective way of getting life insurance for many people. So if you don't do anything else, you should call up your super fund and make sure they have you in the right occupation. If you work in an office, earn over $100,000 and have a tertiary qualification, you could qualify for higher coverage for no extra cost.
Finally, a break for well-paid university-educated office workers.
Oh, jeez, it happened again! If you do want to tailor your super insurance, use an online calculator to find out how much you need. But above a certain amount, you'll need to complete a medical questionnaire. All right, now, who's in multiple super funds? If you don't know, sign up to my.gov.au and link your account to the ATO. There you can get a list of all the super funds you're in and whether you're paying insurance in that fund. Remember, when you move out of a fund, you lose the insurance. So before you consolidate, make sure you're happy with the cover of the fund you're moving into.
And I'd like to end
Hooray!
with some advice on insurance. You're better off with a single, well-designed product rather than relying on the unpredictable fortune of multiple policies, all of which you pay for.
Finally, something worthwhile. And there is a way to get group life insurance that doesn't erode your super balance. All you need to do is make additional voluntary super contributions that cover the cost of your insurance.
Voluntary super contributions? That's even more boring than Julian's speech.
Hey, you know I haven't left yet.